Welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald. On this mediocre Monday, I hope you all had a great weekend and a successful start into the new week. Before we jump into the markets, as always, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend, as usual, is that you check out the Elliott Wave principle, which is the strategy I'm following or trying to follow, that you can read online for free when you use the link in the description down below. Now, with all of that said, we'll jump into the portfolio. Hi, Rai, great that you are here. I still have to update or open the predictions sheet on my end. So we can see this week or today we actually have hide the message there, have a slightly, pretty much break even start into the day with a small red tendency. Markets are going to open in 2.5 minutes. We have still our covered calls that expire this Friday that we, depending on the opening price, might already roll out. So basically take this profit and sell new options for next week, so for the 29th instead of the 22nd. And yeah, now besides all of that, we also have our Novarex calls, our grab calls, and so on, and a few patterns we want to take a look at. I still have the box trade open that we talked about, I think, last Wednesday, and then on Thursday. So about using a box spread trade to basically, in quotes, borrow money at a relatively low interest rate. That didn't work as expected. So apparently it requires a portfolio margin account, so a minimum of around $110,000 or equivalent of other currencies to actually be able to use that money, because as we can see, even now my excess liquidity hasn't increased despite showing the cash balance here. So I think that might be the case. The only other question left would be, would I be able to withdraw some of that money? So basically to really take a loan, but I also would need to consider that withdrawing something might reduce my excess liquidity. So I probably would still not be able to withdraw a huge portion of this. Anyway, what else is there? Unfortunately, I didn't manage to have a stream on Friday. I'm sorry if you were waiting and looking forward to it. We had on short notice a call from our future landlords that they're in the area to sign or at least review the new rental contract. And didn't manage to have the stream. Good news is we actually agreed on the new apartment and everything. So which means in January, we're going to move into a new place that offers us a little bit more space. Although bad news is that means I hope nothing goes wrong with migrating or moving our internet to the new place, because the internet providers here are obviously not the best. And I hope that we will have uninterrupted streaming, although I'm sure we will miss a couple of days in between, because no matter what I do, there will always be at least the time we need to, pack up the setup here, bring it into the new apartment and set it up there. Now let's jump to GameStop. Hopefully we get a chart. What we see here, my previous assumption was that we will still go up to potentially 29.67 in this last move. So just need to circle back here for a second. So on the smaller scale on the 4-hour chart, we agreed that we potentially have a 1, 2, 3, 4, and we were not sure about if that is already wave 4, but it looks like it, which would give us then a wave 5 that has a target between here and here. And it looks like we actually terminated here. So it looks like this is our 5th wave here, in here in some form, 1, 2, 3, 4, 5, considering how big we're retracing already here, which means that right now we would potentially be retracing this entire move, which means I would expect that short term we will go down to 25.08 or 23 something here. So that would be that we can also have to move this. And then based on this, we would get our next wave targets, because on the smaller scale, we have basically wave 1, 2, 3, 4, and 5. 5 actually would be here. Yeah. So all of that's a truncated 5th wave, but from the looks of it, that might be it. Based on how far we retraced here. So although 1, 2, 3, 4, yeah, that works. So it would anyway already be an extended fifth wave. So from a wave perspective, I'm trying to visualize that in a way that you really get what I'm saying. So we have wave 1, wave 2, potentially wave 3 ends here, and wave 4 is now in progress, and then we'll get a wave 5, blah, blah, blah. Doesn't matter how far it goes. Now, in that third wave, we have wave 1, wave 2, wave 3, wave 4, and our wave 5 terminates here. And then in this wave here, we have potentially wave 1, wave 2, wave 3, wave 4. That would be a diagonal. That's why we get that red warning here, because I labeled it as an impulse now, but the label numbers will be the same even if it's a diagonal. But in that diagonal, wave 4 actually enters this territory. And this would need to be a so-called ending diagonal. Yeah, now we could try to label this further, but I think that's already okay. So I might be wrong somewhere here. We always have to consider that. Nobody's perfect. It's just about hitting more often than you miss, or making sure your hits are bigger than your misses. Yeah, but that's what I think we look at here on the small scale. 1, 2, 3, 4 potentially now in progress, considering the decline that we already have here. So this would then play out as like A, B, C, and again take us at least to 25.08 in my opinion, potentially even lower. And then we would get our wave 5 targets, which should then bring us above 30, which means I'm fairly confident that this week, markets are already open now, that this week those calls here will all expire worthless. Which means we get to pocket the entire premium. Now, obviously, I could close them out now, but you can see, for example, for this specific call, we received $203 in premium, and if I close it out now, I would have to pay back half of that, which just doesn't make sense. Although, on the other hand, I mean, we would have to consider how far can we roll for next week. So there are few considerations. The next expiration date would be the November 29th, and November 29th would be here. We're actually gonna maybe add a horizontal, a vertical line, so not horizontal, so extend that. And can I extend it on both sides? No, it's just extending on one. That's a little bit annoying. Can I turn it around? No. Yeah, then we do it like this. So, and bring that one to November 29. So, which means if I'm right, we actually would go lower till November 29, which means on Friday this week, it might be harder to sell a new call option, so the premiums might be lower. So we might already check. Basically, we have our November 22nd options, which would be 30, 31. Oh, GameStop, sorry, obviously not Novavax. Oop, there you go. So weekly, and then again we have our November 22nd, and here we would have to buy back the 31. So 30, 31, 32, 33, and 35. And in return, we could sell for next week. Sorry, for next week, we could, for example, already sell, if we go for the 35 and we sell 5 pieces of that, then we would get $189 in credit net, which means we lock out this profit, which means we actually give some money back compared to what we received. But on the other hand, we get more on the new options. However, if we consider that this is for November 29th, I'm actually fairly confident that by the 29th, we still will play out this here and not be above 30 yet. So if that's the case, we can actually go here, and instead of going for the $35 call, we make this 5. Yeah, we're actually going to do that. So we're going to try to get that order to trigger. Right now, we don't get a bid or an ask, which is a little bit of an issue. So we're going to say greater than canceled and just clarify. We close out 1, 2, 3, 4, 5. And then for next week, we sell all at the 30 strike price. And I'm going to try to sell those for $500. So submit the order and transmit. So we have the order here. And now we should actually be able to get the mid price. And it says there is no mid price, which is a little bit tricky. 450 would be the ask. Yeah, so let's keep that for now a little bit. Yeah, well, or yeah, we settle for 450 here, so yeah, 4.51. Okay, update that. Let's see if we get it to, yeah. So with that, we closed out this week's call, and on the other hand, already sold calls for the 29th at $30, which means we wouldn't make any profit on the shares, but it also paid us $400 in premium, which means on the other hand, we can now also, for GameStop, now where do we have our GameStop shares? So GameStop right now trades at, I know I could wait, yeah, so I could wait and say my prediction is to bring it down here, but if we, let's actually look real quick how much we really got in net premium. So if we look here, yeah, continue. We got $461 minus fees. So I would calculate with $450, yeah. So let's bring up that and then bring the calculator. So yeah. So if we right now, GameStop is around 20, let's say 27. So if we right now use that money to buy shares, we get 16 shares. If we, however, 450 divided by 23, we get 2 shares more, but we also risk, if I'm wrong, to miss out to buy those shares. Yeah. So, and therefore we're just gonna go with buying, yeah, like actually we probably go for 14 shares. So buy, if we say 14, okay, the other option would be 19, and 19 would cost us a little bit more. 19 would actually still work, yeah. So we just use a little bit more of our margin. And 19, yeah, so if not 19, 21 would be the next, no, wait, 20, my brain is not mathing. If we buy 14, we get 540, so 19 would get us, actually if I buy 24, how much would we pay for that? $600. So that actually still also works, so, but no, we go with -5, so we go with 19 shares that we buy. No, actually we go with 14, so we stay within the margin requirements. I know it doesn't make a huge difference, but basically we submit that order now. Yeah, now that was actually cancel that, yeah. So, and we also have to cancel the buying the calls back because we now already closed out our calls. Not the Novavax. That one I didn't want to cancel. Screw you, yeah. So GameStop, not calls, but shares, buy. And we said we buy 14 at the mid price, good till canceled. So 14 shares. And then just bring that to mid, update. And shouldn't be too hard, yeah. So okay, mid is moving up, then we're just gonna offer ask here. There we go. So we got 14 more shares now that we paid for with the premium, which means if the price by next Friday would be above $30, we get 500 shares called away, but we still have 40 shares that we pretty much funded with premium alone. Actually 140, since 100 I already moved away to computer share. Yeah, let's see how long it takes. So how many more weeks we need to basically stock that up further. And now I have to, we have our Novavax call here, that one that we sold, or actually 2 that we want to buy back ideally, and we want to buy them back for 1 cent if possible. Yeah, not mid, but 1 cent or $1 actually per option. So we buy back 2 of those if possible. So since that's the order that I canceled by mistake, we have the order that we triggered here. Anything else we need to do here? No. Okay, with that we can circle back. So I said for GameStop, well, there might be still some move up that I'm missing, but from the looks of it, I think we might be retracing down here. Now, if I'm wrong, what happens? I basically gave up the options for this week, traded them for next week, and instead of having 30, 31, 32, 33, and 35 as strike prices, we now have them all at 30, which means if GameStop rallies now, I miss out on a little bit of profit here. So like 100, 300, 600, $1,100 profit that I could miss out on. But on the other hand, we already got now $400 in premium already that we used to buy a couple more shares that obviously, yeah, so actually would give us, would that give us more? So assuming GameStop goes above 35, now we bought, yeah, probably not, yeah, obviously not. So we got 14 shares, and if it goes above 13.5, so yeah, so net we would lose around $860, or yeah, miss out on $860 profit if GameStop were to rally right now to 35. But again, based on the pattern, well, there is still a little, yeah, a chance that there is another push that I'm missing. Yeah, like we would need to retrace this whole part at some point. So, or actually in this case, we're not retracing that whole part yet. We would be retracing this part here. Yeah. So, and if we're retracing this part here, we would actually expect the retracement down here. And again, that means I could have waited with buying the 14 shares, but I rather buy them right now, because if I'm wrong, then I would not get it here, but I would have to buy them even higher. So yeah, and our options now therefore expire on, what did we say, November 29th. On the 29th of November is now our option expiration date. So we know basically if we stay below 30, we basically pocketed the $400 in premium and use that to buy more shares, which helps us technically to, in quotes, average down further, or at least increase our position. So yeah. And that about GameStop. So GameStop in quotes unchanged. So if I would have to, so our GameStop prediction is still basically, it's 32.16 right now. And that's based on, do I still have that on the chart? It's based on this overlap here. Yeah. So on the bigger assumption of wave 1, 2. So that would be our next goal, but short term we could go down. So now if I try to put that into as short as possible so that we can take this as a clip in quotes. Yeah, so if we look at GameStop from the beginning, we basically have a potential wave 1, 2 that is hard to label, so I'm not going to bother it here. Followed by then we would be in wave 3 theoretically, where we would also have the next wave 1, 2 here, which means we would be in the third wave of this bigger third wave. And then here in that third wave, in the smaller one, we would have wave 1, 2, 3. I think 3 ends here, and we're currently retracing that third wave based on retracing this entire move. So short term, it would mean that we should go down between 25.11 and 23.17. Whereas after that retracement for that wave 4, we would get a fifth wave that then should actually take us up into the area of 32.16 to 33.81. So that would be our next target area. Depending on how far we trace here, so if we retrace here only to 38.2, we also would actually perfectly overlap the target areas here. So short term, as said, retracements, in my opinion, into this area 25 to 23. And then midterm, the next target would be, as said, in the area of 32.16 to 33.81. That's about GameStop. Moving on to Barnes & Noble Educational, there we are still in the areas that we would expect. It's getting a little crowded here on the chart. So where do you come from? You're this retracement. Okay, then you are that retracement, where we now already retraced 78.6%. Here we hit the 100% target. So we're going to remove a few things for now that we don't know yet because it's still in progress. And then this one here, it's actually there. So we don't need that far. So yeah, we'll have to wait and see. If we break the 880 here, that would be the point to consider getting out, or if we break the 831 where we have the alert here. So for now, the pattern would still be based on this here. We have 5 waves up, 3 waves down, and we would be in the next 5 wave up impulse. That would be the most likely scenario. So long positions right now would still make sense. Our profit targets are here of 1419 to 1977 on the basis of this expansion, which would be the assumption that this is only a corrective move that's going to be followed by a further downward impulsive move. So that's kind of like my worst case assumption here. Yeah, meaning that again, I think that we are to see more upside here, but stop loss could be, in case I'm wrong, at 831. So if someone were to go long right now, personally, my take profit right now is at 1710 for the few shares that we are holding, under the assumption that this is going to be, where do you come from? Yeah, where do you originate? Here, yeah. So that this is basically wave 1, wave 2. Yeah. So that this is wave 1, 2, and we're currently in wave 3. Yeah, so that's my current assumption here, that we'll take profit here at this wave 3, and then it would be wave 4 and wave 5 that takes us into the higher area. But again, the short-term targets would be based on this, where our profit target is actually in the middle. So we have that overlap anyway. Yeah, so that's about Barnes & Noble Educational. We'll just have to keep an eye. If we break 831, that would be the time to reconsider that either this correction is not done or I'm overall wrong. But other than that, yeah, we'll just have to wait and see. Moving on, what are we moving on to? Let's move on to Novavax has been declining a little bit further. So yeah, we were partially wrong here in the past. And now the question is, did we finish our fourth wave finally? We are within the target areas for that fourth wave, as we would expect. So based on this being wave A, wave B, and now wave C, visually we might have now 1, 2, 3, 4, 5 here. So to be done with that wave, we are a little bit below the 61.8 retracement of this entire move. So there is still, there is still the chance that we are potentially getting another push a little bit further. But if not now, then when, in quotes, yeah. I would get worried if we break below 580. Our prediction here for Novavax is still super bullish. No, there the record keeping is not accurate. So the long-term prediction is still bullish based on the assumption that this is 1, 2, 3, 4, 5. Because if this would mark the end, we would expect an upwards fifth wave to at least 23. And up to 48, which is quite a lot of upside. We'll just have to wait and see how it plays out. The pattern would become completely invalid if we break the 381 mark here. So that would be the time to really definitely close the positions and move on to other stocks or assets that show clearer patterns. But as long as we are here, the pattern actually checks out. My calls that expire in January will likely expire worthless, and it will be a $200 loss here. I would have to look into other calls, but for now, I just want to see how this pattern plays out, and only once I get the next, in quotes, confirmation that we're indeed out of the woods, would I get into a new position. Although right now they might already be relatively cheap if we look at Novavax. And now January is unlikely, but for April, for example, considering that our profit targets would be right now $22.97, so we could consider getting even the $20 calls. So if we look at their profile, you can see that if we would have a 100% move, and even at, and let's go with the expiration date. So even at $15, no, there would be a profit or loss. Yeah, so no, we'll need to use option strat for that. 1 second. So trading option strat, optimize, and then if we say Novavax, and we set our minimum target here would right now be basically $22.97. And however, in April, then we see that, for example, we could just get a long call, but it would need to be the $10 call. And for $112 premium, we would have a potential profit of $1,100, or get a bull call spread, which would technically reduce the cost a little bit in case we go higher, but not by much. So it doesn't really make sense because the payout is also not really that much better. Because if we consider the maximum target of 48.71, the bull call spread would actually not let us benefit. So it would always be, if we are right, that would be capped at 1,392. Whereas if we, now what did I say, 48.71, if we, we cannot even see that far. So if we were to be right, we could see that the regular call would actually pay off twice as much if we even get close to the maximum target. Obviously, the question would also be, do we get close in time and so on? So, but yeah, that would be right now the play to go with. Buy the $10 call, and for every $100 risk. So it's like a 1 to 11 even ratio, or 1 to 10 ratio for risk reward, which is quite good. So, but again, I will first wait to see maybe additional confirmation. Now we have a average cost is missing. We're actually gonna, I will later try to see if I convert some of that US dollar amount into euro, if it would theoretically show up for withdrawals, but then I will actually close out that trade. So, because there's no reason to keep it open. Just will have to see that I close it out as good as possible. There are, I mean, technically, if I close it out for 25, so if I bought one, so I would need to sell one, and if I sell one, then it says it's 28. No, actually, I would need to close it out for less. So I would need to try to close it out for minus 22 would be ideal. And I don't care if it fills outside, if we fill it for that price. So debit, yeah, so it's not credit. So I pay 22 for that. I sell one for minus 22. No, I don't want to have, wait. So that's a little confusing because it paid me money, but I still hold one of those. So there would be the close button. Okay, if I say close position, then that would be sell one, and then it says minus 28, but I would actually like to close it for minus 22. Okay, so that's what we're gonna do. Good till canceled, fill outside, and submit. So obviously it will not trigger for this price, likely not, yeah. But if we get lucky, it might. Would need to get very lucky, yeah. But yeah, anyway. So yeah, so Novavax, we're waiting, and I will wait for how it develops before I consider opening additional positions here. And that's that. Now, Ethereum, something in the crypto area, I think we might have finished the correction. So if this is A, B, C, we might be done with this correction here and follow the next 5 waves up, because although we didn't fully reach the 38.2 retracement, we got plus minus $40, so plus minus what, 2% into that area, but visually we would have reached the target area that we expect. The only exception would be if this is only wave A. We are currently seeing wave B develop, and then we get a wave C, but then we would also get a new target area here. Now I have limit orders here, here, and here that so far didn't trigger, but we'll see how it plays out. And yeah, Bitcoin is still going strong, but again, I think that here we might be, oh, there we have a 3-wave corrective move, so there might actually still be a little bit more upside before we start to correct, but eventually we'll have to see a correction that follows again our usual patterns. So yeah, but the few Bitcoins, or not Bitcoins, but fractions of Bitcoin that we are holding, I'll just hold them. I don't switch or try to predict the moves here. Yeah, moving on. What else do we have in our portfolio? Probably Grab. Okay, Grab is still going strong. So there we are. That would be the assumption that this is only a corrective move, A, B, and then wave C, where we would have our target here. The moment we break 535, it's very, very likely that we indeed have 1, 2, 3, and then our profit target would be here, 942 to 1088. There we can probably sublabel 1, 2, then 3, likely not finished, 4 and 5. So we'll see how that plays out. But again, that's a weekly chart, so it takes weeks to develop 1 week for each new candle. So it will take months for us to see how this pattern actually plays out. And I only hold a call that expires in January 26, so there's still some time. And yeah, so that's that. And then yeah, green wave doesn't matter. Immersion. Okay, still waiting. We're on a weekly chart here as well. So basically to either get the final bounce here or see that we're wrong. Costs, same thing. We're waiting for we're waiting for quite some time already to break either the 879 to the top or the, what was it, 652 to the bottom. To either way confirm correction done or only part of the correction done. NEO, yeah, still going down. Now we actually bounced at the 78.6 retracement or very close to it, which also, just have to check, which also is past the minimum target. So theoretically, this might be a good entry. I actually had my entry at 432. As we can see, we'll have to double check. I actually plan to use available funds here at 432. I'm gonna cancel that one because either I'm right and it might be tempting to get in here and we would already go up here and would have what, 50 to 100 something percent upside. However, the other option is this is 1, 2, and then 1, 2, 3, 4, 5, and then we get with 4, and then we get with 5, which means we would potentially go lower, and we might be able to enter 20% better than now. But yeah, as I mentioned earlier, it's not bad in my opinion to slowly enter in tranches. We already also bought a few shares, not that many, as you can see. Stop loss would need to be here at the low at 368. But basically one could increase the position and average down as we're correcting further. And if needed, take the loss at 368, which in my case would right now be an $8 loss. So really not that bad, plus commissions for the trade. But yeah, so NEO, do we have a new prediction on the chart? Yeah, 468 to 432. So we hit the 468 prediction and we made it when we were still at 518. So when we were somewhere here, end of October. So here we actually made the prediction. I think the moment we broke the, or it became clear that we likely will break that point here. So we made the prediction that we will go at least to, what was it, 468, and that we reached now, and that the next level would be 432, which would be the 78.6 retracement. Yeah. So, and again, we could look closer or try to look closer and label the subwave, but I think we are good for now. And we'll just wait to see how this plays out and keep an eye on it. And once it's visually apparent that the corrective pattern is, in quotes, done, we might increase our position further. Yeah, we already covered most of the other things. We can take a look at the NASDAQ. That now seems to be correcting a little bit. No, we're still missing time to actually label this pattern. I'm not going to do it today. SPX, there we don't have a pattern on the chart at all right now, so not today. What did we do here? That was our box trade, yeah. So yeah, of course. So, and then NVIDIA is dropping a little bit. We also don't have any data on the chart, so we're not going to label it today either. And then I think Amazon, we have something on the chart. Yep, so yeah, I mean, we bounced here right now, but again, I think that's just the beginning of that move up here. So unchanged. DJT dropped a little bit. So are we wrong here, DJT? I mean, the company is hugely overvalued and the stock price disconnected from any kind of fundamental reality, in my opinion. But yeah, do we get a chart? No, we don't get a chart. Okay, I think we'll call it a day here since there is no request in the chat to look at something specific. We're just going to call it a day here. We covered most of the things we look at. I think what's going to be interesting in the next couple of weeks, as I said, GameStop. I believe that we, as said, retracing right now this entire third wave, what I believe is third wave move, which means we would expect to go down anywhere from 25.11 to 23.17. Considering how long wave 1 is, how long wave 2 is, how long wave 3 is, I would expect that wave 4 drags out past the 29th of November, and before we then get wave 5 up, which means, again, if I'm right, we just pocketed $400 in premium that we can use that we use to buy a few more shares. Yeah, then we can actually sell the calls at a higher strike or wait a little bit. So we'll see. It also means that potentially the shares that we're holding will move a little bit into the red. Yeah, but that's okay because I think it's only, again, a correction like this. So even if we're then there temporarily a little bit in the red, after that it should be followed by the next upwards move. Yeah, now obviously it would also be tempting to try to, like sell here, buy back again or so, but that just means risking to miss out on a bigger move. And by writing covered calls, we always have the option to also roll the calls into the future. So potentially take a small loss right now, but collect extra premium at a higher strike price to realize extra potential profit in the future. So it gives us a little bit more flexibility, and by writing the call options every week, we earn extra premium to buy extra shares to increase our position further, and also to buy shares in other stocks where we think, or where I think that there is money to make. Yeah, but that's pretty much it. So yeah, I'm gonna say thanks for stopping by, thanks for tuning in. I hope you all have a great, successful rest of the week for your own portfolios. Yeah, there's going to be another stream tomorrow. So again, don't forget, like, subscribe, enable notifications, and then see you tomorrow again around roughly 5 minutes before market open. Yeah, thanks for stopping by. Have a great day. Till then, bye-bye.